We've got a special voice joining us, global voice joining us now. Laurence Balanco of CLSA is joining us from the sidelines of the 25th Annual CITIC CLSA India Forum. Laurence, great to have you with us here on the program. As always, appreciate your time. You in your latest report have put out a framework to think about markets into 2023. And you're basically saying that this rally may extend a bit longer on the upside. But that's likely to fade as we begin 23. So in a way, almost a repeat of what we've seen earlier this year in 2022. I mean, the markets did well before topping out in January of this year. Your thoughts?
Yeah, definitely. I mean, the work that we've done here, we saw sentiment extremes into the October lows, as well as a number of market divergences that has led to the current rally that we've seen play out across global markets. And our work that we've done on our cycles into 2023 does suggest that we do overshoot the upside, and we think the S&P can trade above its 200-day moving average. And the Nifty on the back of that should trade to new all-time highs, and we get an upside target closer to the 20,100 area for the Nifty into the first quarter of next year.
Hey, that's a bullish view, Laurence. Good morning. So you're saying 20,100 on the Nifty by the first quarter of the next calendar year. That's not too far away. Do you think the support of the market has moved higher now, the base of the market? And if yes, what could the floor be over the next, say, 6 months or so for India?
Yeah, so if we look at the Indian markets, through the first half of this year, we found that support around the 15,500 area. And we do think that's shifted up towards the 17,000 to 16,900 area. So that should be a sort of a key floor heading into the first quarter. I wouldn't expect to retest that until the sort of second quarter of next year, where we do see markets coming under pressure again. So I think, the floor is in place after we tested that in October. That support level remains intact around the 17,000 into the first quarter.
Okay. Hi, Laurence. Morning. Something that works for emerging markets as well as for India is the currency moves. And the dollar index, well, it went to around 115, collapsed to around 106.5 odd. Has it made the peak out there for the dollar index and the Indian rupee as well? Where do you see that one headed?
Yes, I think one of the key setups that we're looking for into 2023 is a more significant top in that dollar index. So in the near term, there is support between 103 and 105. It's basically the 200-day, but also the 2017 and 2020 highs for the dollar index. And at some stage in the second quarter, we do think the dollar does get a rebound, but that rebound forms a lower high, and that's part of the topping pattern that we see for the dollar in 2023. And ultimately, towards the end of 2023, we think the dollar index is trading back towards 95. And that should put the Indian rupee back towards 75 towards year end of 2023.
Sorry, repeat that, Lauren. You're saying dollar stays under pressure now. It jumps again starting the Q2 of 2023, and then is back to 95 by the end of the year, next year.
That's right.
Right. Laurence, the last time we spoke, you were more cautious on India, I remember. Is it momentum which has forced you to kind of change your view? I mean, what are you looking at for these forecasts? Is the basic underlying reasoning?
Well, it's not quite right. I mean, we had markets falling back to the 15,500 the last time we spoke, and that's where we got more constructive once we cleared the 200-day back in July. So what we see now is the trading range that you've had since January, breaking above this 18,500 area gets us that upside target of 20,000. And then looking at the momentum indicators confirming the current recovery in global markets, but also in the India market.
Okay. Coming back to this big target that you've put out, right? 20,100 on the Nifty by the first quarter of the calendar year. Where do you see the leaders emerge from? Will it continue to be banks, which have been front foot forward up until now? Or do you think technology could come back into action?
No, we definitely think we stay on the banks being the key leadership group for the market. But if we had to get more granular within banks, the key sector is actually the public sector banks. So if you look at a relative chart of public sector banks versus the broader banks index, you'll see that public sector banks underperformed from 2010 all the way down to the 2022 lows. You've got a big base there. So we think within banks, while the broader sector leads, public sector banks is the key leadership, but even within the leadership group. So that'll be a key message getting across that public sector banks lead here.
You know, Laurence, the last time we chatted, you gave us a sense about the breadth of the market as well here in India. That's the mid-cap and the small-cap indices. Where do you see those indices moving? In the last couple of days, the breadth hasn't been great. It's been more the big boys that are moving, and that's where the Nifty is moving up. But any levels you're tracking on the small-cap and mid-cap space?
Yeah, you're quite right. Both mid-cap and small caps are consolidating here. We think into January that they will play catch-up, so we'll see some rotation out of the larger cap stocks as they get extended. But in the near term, we think the action, driving us towards the 20,000 is going to be more driven by the large cap names, and the small and mids will play a bit of catch-up at a later stage.
Laurence, dollar weakness is great for emerging markets. Where does that leave, markets like China and China-related assets? I mean, Hang Seng, for example, has been rallying. Off its lows last month, it's up some 25% already. Do you think as we head into the next year, there is one market which could surprise on the upside?
Yeah, so we think HSCR, for example, can trade back to 20,300, so another sort of 67% upside on this initial recovery. It's quite a common tendency into year-end that lagging markets do get a bit as you get portfolio repositioning, and obviously with the catalyst and some of the policy changes that you've seen there, we do think that the risk is a surprise on the upside. But at a minimum, we think the HSR can trade back to the 20,200 to 20,300 area.
Okay, one final question then. You said that public sector banks will lead from the front or will continue to lead in this market. What else? So where do your preferences lie on the charts? Do you see Reliance Industries come back in a big way? Is technology going to make a comeback of sorts?
Yeah, but the banks are still a key focus. Outside of that, we think you should be taking profits in the fast-moving consumer goods space, as well as the autos. Autos had a great first half of the year, and we started to see that upside momentum slow there. We think there's some selective opportunities in the technology side, but that's not going to be the leadership group that we saw off the 2020 lows. That's all focused on the bank side.
Commodities, Laurence, did you touch upon that? Oil, metals, what are we to make of those? And what are your forecasts?
Well, so our base case on the broader commodity side is that we think we're in the secular bull market, and we think that will continue to extend. And if we correct in our view of a dollar top, we think that dollar weakness will also support further re-rating on the commodity side. Recently, we've seen a breakout in gold that we think we can trade up to 1880 there. We've got longer-term upside targets of 2150. As far as Brent goes, we think we're in a holding pattern basically between $88 and 123. And in the short term, you've got a base forming above that $88 to trade back towards 113 to 115. So, trading range is the worst case scenario we see for commodities. But within that space, a general uptrend we think continues to play out.
Okay, have a great conference, Laurence. Thanks a lot for joining in and giving us your thoughts. That's the word coming in from CLSA. They're quite optimistic.